to Tushar Pradhan, who's with us, director at HXGON Partners. Tushar, good to have you with us here. Good afternoon. What do you think, Tushar?
Well, that's a tough one because generally at the start of the year, we agreed that this was going to be a difficult year, simply for the fact that there were too many international events. There was overvaluation in domestic markets. There was pressure on earnings, which all indicated that the market was not going to be a smooth ride. And it kind of proved itself because February was especially brutal, but it began probably September onwards last year. I would think that there has been some correction in terms of valuations from where they were. And practically, if you look at a 1 year rolling behind you, most of the gains which were there at the start of the year, last calendar year, they've all gone, they've disappeared. So we are practically back to where we were probably by February of 2024. Now, that's saying a lot, but which means that if we were to say that the market should take some speed from here, I think there are two things we should focus on. One is the continued momentum in earnings growth, which again, March being a very, very crucial quarter, we should get some benefit of. Second is the kind of selling that we've seen from the FPIs for so long. I don't think that is going to be a perpetual case, which means that the turnaround whenever it happens. And many times in markets, all of these things come at one time. So as all of the other negatives came at one time, I think the positives could also come back at the same time. And I think we might also see a bounce back. I have a strong feeling that as we began the year on a very bad or a bearish note, I think we'll end the year in a very different note. That is my call.
Do you want to hazard a guess how we'll end the year, Tushar? Different means what?
Different means then definitely better than where we are today. Because we began the year with looking at, as I said, a host of negatives, including the fact that maybe earnings were not really that strong as well. But I think the FY25 picture, having now gone behind us, we are talking about FY26 as the current year in a few days from now, and FY27 becomes 1 year forward. And I think that is something which is very, very strong from my perspective in terms of earnings numbers, and the EPS number can really be a big surprise on the upside. So all of those will get, kind of somehow discounted in the price somewhere during the end of this year. And that's why I'm saying probably by the end of the year, we'll be in a much better space than where we are.
You think we can get back to our all-time high levels?
To history, that has always been the case. So that's a safe yes, but maybe not within the year. But why not? I mean, if the earnings surprises come strong by the second quarter of the next year, I think we can see something like this by December. So I'm pretty happy about that.
A quick word on wires and cables. Increasing competition, stocks are getting derated. At HXGON Partners, how have you read the entry of two large players in this particular segment? Did you all own it in any of your portfolios?
No, I thought it was one of the sectors that I think we missed out on, but we were happy that we weren't part of it, simply for the fact that when we were aware of what was happening in the cables business, the multiples of most of the businesses were at a level where I could not understand why they would trade at those levels. Because at the end of the day, it is a commodity which is, very accessible and very easily available. So why would companies actually, continue to trade at these levels? And that is more or less justified when you have some strong competition coming into the market. You will just destroy the valuation because now you have a plethora of suppliers as opposed to earlier there were maybe a 4 or a 5 member set. Having said that, I think if the earnings continues to grow, it will have to now grow for more players than before, which becomes very challenging as a sector. And especially of a sector where the barriers to entry might be slow or low, sorry. It doesn't really, make sense to kind of hold them. At that time, at least that's when we thought. And even now, after the big, drop in valuations, which is almost halved, the valuations still are not really at the place where I would place a manufacturing unit like that at. So we're happy to, not own them. And I think something similar to what happens in the paints business is something that we are seeing here in a much more dramatic fashion. But that's what competition does to all.
Yeah, I know. For the market, it's like once bitten, twice shy, right? We've seen the pain in the pains segment and still not recovered. I mean, still waiting for things to really meaningfully improve, and therefore the fear around wires and cables. Take that point. Tushar, just give us 1 minute. There's a important and interesting story that's come in on.
So your view is positive, and to the question of whether all-time high by the end of the year, why not, right? So what will lead the market there? What are you most bullish about?
I think clearly, I think the ones which have been laggards so far, which is the financials, and which are key in terms of where the economic growth will come from. I think those are the ones which will lead, because if they start to move, which they haven't for a long time, then you will get a very significant momentum in index movement. And I think that's really where it will come from, because otherwise your mid and small cap companies are not going to do much heavy lifting as long as the index, as far as the index is concerned. So which means that you need the heavyweights to move. And I think that is really where the confidence comes from, because the heavyweights have not moved at all. Whether you take any of the biggies, especially now that the IT pack took a big severe beating some time back, they've come back a little bit. You've seen the financials also, they've taken a big hit. They are trying to come back. If you take absolute valuations, I think they are now significantly lower than the longer term averages at what they've traded at. And I think even if they go back to the longer term averages, you get a significant move in the market. So that's really where the confidence comes from at a top market down level.
Okay. Tushar, we were just talking about wires and cables earlier, and you were obviously cautious in that space for reasons that you explained. I want to just talk about the other sector. Typically, these are themes that start working when it's the season, literally, summer. So I'm talking about some of the consumer durable players, room air conditioners, etc. Beyond just playing that theme for the next couple of weeks, do you see some merit here, reasonable growth, valuations, etc.? How's the overall, consumer durable segment looking?
No, as I said, I think we are actually quite constructive on this space for two reasons. One is that there has been a significant move to increase consumption levels in this country. And if you remember, already, of course, the budget is a forgotten subject. But all of the kind of benefit that a large section of India's population is going to get from absolutely zero tax on their income now, which are a large number of filers, have to find, some place for this discretionary income to go to. And what better than a summer season to, install a new AC or, get yourself a purifier or whatever that means. I think this is something which is going to be I would say, a multiplier effect, where you have regulations going in your way, you have significant discretionary income, and the fact that, seasonality, etc., is lending you to push in a certain way. And as I said earlier also, these impacts could be longer term in nature. And I think there might be a significant improvement in terms of the demand situation as we go into the summer and beyond. So I think this is a space which is something to watch out for.
All right, Tushar, thank you very much for joining us. Appreciated your thoughts and insights here on CNBC TV18. We'll take a quick commercial break here with news that the market's up 280 points. Nifty Bank is up 0.75%, and market breadth holding very, very strong. Take a break. See you on the other side.